And we are live. Good evening, everyone. Tonight, we will be discussing a research report that was released by Goldman Sachs, I believe, 2 days ago, where they were questioning the dollar's reserve status because of the record levels of debt that the United States actually has. And then right on cue, the GDP report comes out, and US GDP is falling off of a cliff to the tune of negative 32.9%. We are literally living in the middle of a depression. And as I've been telling you guys on this channel, depending on how well you've prepared, depending on which segment of the economy you are in, it's either going to feel like the best of times or the worst of times. For some of you, it's booming. You're thriving. For others, it feels like a recession. And for some people, it feels like a depression. And this is a bittersweet moment for me because I've been predicting this on this channel for well over a year now. And what a lot of people don't understand is when the economy was quote unquote thriving and booming, and Trump was talking about all of these jobs that he was creating and how his policies were working, I was telling you that that economy was fake. It was phony. It was all driven off of stock buybacks and manipulation and the interest rates being extremely low and the Fed meddling in the marketplace. And see, once you understand monetary policy and how it impacts the economy, then you can see how the Fed creates these boom and bust cycles. So when this pandemic hit, this was just the pin that popped the bubble. And the only way that you can get out of this is to do what? Is to continue to keep printing money. And if you go and you watch the movie The Big Short, there was a scene in the movie where they were I believe they were in the casino, and the young guys, they were so excited about how much money that they were about to make. And Brad Pitt turned to them and he said, "What are you doing? Do you understand the implications of what's about to happen? So many people are going to lose their jobs. They're going to lose their homes." And that's how I feel when I make these live streams, where a lot of my predictions and things that I believe were going to happen, they're actually starting to happen. And what is the world going to look like for a lot of people who are not prepared for this great reset, who are not prepared for the fourth industrial revolution that we are going through? You know, so many people are dependent upon government. And if we lose the reserve currency status, then what does our economy look like? What does the world look like? And you have to ask yourself that question. Another thing that I predicted that we're going to cover tonight is bankruptcies. I told you guys, so many companies were over leveraging themselves and levering up their balance sheet because you could borrow at such cheap rates, such cheap interest rates. Well, now, because people over leverage themselves and they don't have that income and revenue coming in, you're seeing so many businesses having to file for bankruptcy. And many of these businesses will not come back. When you see a company shut its doors and you're watching what's happening with the retail industry, especially the retail industry, we're probably only going to have 3 or 4 major retailers in this country. It's going to be Amazon, Walmart, maybe like a Target and like a Costco or something like that as far as like grocers are concerned. Like, this is happening. So what do you think is going to happen to all of these mom and pop businesses, these small businesses? They're never coming back. And then look what happened with the whole PPP program, where small and mid-sized businesses that needed the capital, that actually hire people here in this country, hire people locally, create jobs, they were not able to get access to that program. The money was given to people who didn't even need it, to a bunch of billionaires and, people who were connected to politicians. So you're going to start to see this process start to accelerate. And this is why I was telling you guys, you need to own precious metals. You need to own crypto. Because now when we look, the crypto market's on fire. Our bags are pumping, just as we predicted it would. Gold is rocketing higher and higher every day. Silver is outperforming. It's a beautiful thing to watch, but it's also a somber feeling knowing that most Americans are not prepared and they aren't taking this serious, or they're not even in position to be able to capitalize off this. So as you come into the video, please like the video, share this video, subscribe, hit the notification bell. Make sure that you join my mailing list, which is inside of the description. If you want to follow me on Instagram or message me, you can contact me via Instagram. I also created My Tech Academy, where I will teach you about how you can invest in cryptocurrency and also teach you how cryptocurrencies work. And we have a free 7-day trial. Also, tomorrow, for those of you who are a part of the Academy, you should have been notified via email. We are going to have our weekly meeting tomorrow at 1 p.m. Eastern Time. Going forward, our meetup times are going to be not every Saturday, bi-weekly. So every 2 weeks on Saturday at 1 p.m., that's going to be our meetup times where you can ask your questions after you go through the course material, because I know a lot of you may be struggling, you may have some questions. So tomorrow, 1 p.m. Eastern Time, we are going to have our live stream for members only. Also, for those of you who are a part of the Coding Bootcamp, I've already started uploading all of the content into the Academy. For those of you, you need to go into the Academy, look in the Coding Bootcamp. You have to make sure that you are keeping up with the lessons, because we're going to start moving really quickly. Every day, I'm putting more and more content into the Coding Bootcamp. I believe I uploaded about 6 videos in the past 2 days as well. Guys, please make sure that you're keeping up. Make sure that you're doing the assignments, because once we start building projects, I'm not going to be able to keep going back and, teaching you the basics, like what's a for loop, what's a while loop. Like, you need to make sure that you are going through the material so that when we start building things, you will be able to keep up. And if you can hear me clearly and see the screen clearly, just type 1 and we'll get the stream started. How's it going, Miss Piggy? Thanks for the like. How's it going, Candace? Okay, so everyone can hear and see the screen good. Okay, let me take a sip of water and we'll get started. So, it says, a spike in gold puts the dollar's reserve status in question, Goldman Sachs. A record high price for gold, known as the currency of last resort, is raising questions about the U.S. dollar's future as the world's reserve currency. According to a Goldman Sachs research note published Tuesday, the commodity, which tends to see increased demand during economic uncertainty, reached an unprecedented price of $1,943 an ounce this week, in part because of record low interest rates that Goldman Sachs analysts said may demonstrate a stronger appetite for inflation at the Federal Reserve. I want you to think about that. A stronger appetite for inflation at the Federal Reserve. So they're basically looking to create more inflation. Darius Harper, thank you for the donation. Are you familiar with AWS Cloud Engineering Field? What's your recommendation? I'm not that familiar with it, but I know that it's profitable and I know that a lot of people are getting involved in it, but I don't necessarily focus on it. But anything that's in cloud, anything that's in tech, you need to be getting involved in it. We're watching, if you just look at the earnings and you look at where all the growth is happening at, anything that's in that field, if it's artificial learning, deep learning, machine learning, the cloud, anything about that, you need to be focusing on that, right? So that's why I launched My Tech Academy and mainly focusing on teaching you guys how to program. I'm mainly focusing on the blockchain aspect, building and deploying smart contracts and dApps. I'm not really focused on the whole like machine learning, AI stuff, but I do know that it's profitable and I would definitely tell you to get involved in it. But I'm mainly focusing on the blockchain aspect because this is a growing industry. So I'm starting with JavaScript because the Solidity programming language, which Ethereum utilizes for their blockchain, is very similar to JavaScript. So in My Tech Academy, we're focusing on really getting into the whole blockchain aspect and building our own dApps. That's where we're going with that. So, anything in the engineering field, though, is profitable, but we're focused on the blockchain. That's where all of the money is going to be at, right? So it says, combined with a record level of debt accumulation by the U.S. government, real concerns around the longevity of the U.S. dollar as a reserve currency have started to emerge, the analysts wrote. It says the idea that the dollar may one day be seen as less of a safe currency jeopardizes its role as the world's reserve currency, a position that has given the United States financial system a tremendous advantage in global financial markets for decades. I have been telling you guys this for an extremely long time. We get to export our inflation. And we get so many benefits because we have the dollar. So we force other countries to have to convert their currencies into dollars. And because we put people in that hamster wheel where we put them in debt, they have to use dollars to do business. So it's a way of entrapping everyone and forcing them on that hamster wheel. And that's why I was telling you, when you go to the bank and you take out a loan, you create demand for the dollar. Because you're going to spend the next 30 years of your life working for dollars because your debts are denominated in dollars. That's what gives the dollar value. But when you think about gold, when you hear people say that gold is a currency where, of fear, this is why I said to myself, I'm going to make money either way. It doesn't matter. Think about this. If the economy's doing bad, gold is a fair trade, right? So people have to buy gold because the economy's doing bad. But then the flip side is, how do we get out of a bad economy? You have to print money. So therefore, by printing money creates inflation, which also pushes up gold prices. So it's a win-win when you start thinking about investing in hard assets, right? Because gold is a fair trade. So when people are fearful, they sell their stocks, they sell other paper assets, and they flock to hard money. And then the government comes behind that and they print trillions of dollars. And then that causes inflation, which pushes the price of gold up as well. So this is why I was saying to you guys, I don't really want to play the stock market game. I want to focus on precious metals mining stocks, right? And I want to focus on hard assets. And then I want to play in the crypto market because I understand that Bitcoin is trying to become digital gold and is grossly undervalued. So I'm thinking more of sure things. Nothing is sure, but when you start thinking about risk versus reward, that's where all of the reward is and very little risk. So listen to this last part. It says, gold is a safe commodity because it is in limited supply and considered to have inherent value, which means fears of inflation and other economic turbulence like the pandemic recession could drive up demand. Goldman Sachs increased its 12-month forecast for the price of gold from $2,000 to $2,300 an ounce. Limited supply. When you think of dollars, as I've literally showed you videos of Jerome Powell, the Federal Reserve Chairman, saying they just print it. Now they can do it digitally, right? So you have to keep that in mind. And now when we think about it says the US dollar suffers its worst month in a decade. It says the euro rose the most in a decade this month. The British pound is headed for its best July since 1990. And for the first time this year, every major currency in the world rose against the greenback. Now I want you to understand this. See, this is why you have to read 1984, because this is extremely Orwellian. They're basically trying to make it seem like these other fiat currencies somehow are superior to the dollar. that somehow they're rising against the dollar. When in reality, if you overlay a chart and you look at all of these fiat currencies, they're all declining. They're all being debased. They're all being devalued. See, this is double speak where they're trying to make it seem like, oh, well, because the U.S. didn't handle the pandemic correctly, they're having to print more money and other economies are doing well. See, that's the game. That's the tricknology right there. They're trying to play on your mind and play tricks with you. All fiat currencies eventually return to its original value, which is zero. Every single fiat currency throughout the history of man has failed. Fiat currencies always fail. They always go back to zero. Why? Because governments cheat. Governments will always print more money. That's the way that they will all the time try to get themselves out of bad government policy. Policy. This is driven by policy. This is bad policy. When you see companies receiving PPP loans, country clubs receiving PPP loans, but yet small businesses, mom and pop businesses can't tap into that, that's bad policy. But it's designed to be bad. So understand that. In a book I want to encourage some of you guys to read is The Bitcoin Standard, where they really go through the history of money. And I'm going to actually read a few passages from that book later on in this stream. So it says a gauge of the dollar against its biggest peers is down 4.4% this month, the worst rout in a decade. The world's reserve currency of choice was already on the back foot when U.S. President Trump raised the idea of delaying elections this year. But the dollar's been declining, right? The Fed, and I've showed you guys the Excel spreadsheet where literally every year you're losing about 3% of your purchasing power due to inflation. Every year. Every year. And that's if you believe the CPI data, which I don't believe any government data. I know that it's probably 10 times worse than what they're telling you. And what does that mean for everyday people like you and I? The cost of everything around you is going up, but your wages are not keeping up fast enough with inflation. So what you have to do is you have to earn assets that is going to appreciate with inflation, right? Because what we get a lot of asset price inflation. The problem is many of us, we don't own enough assets to be able to keep up with inflation. So therefore, we always lose. And I saw a donation come through. How cheap can a poor person on a fixed income or low salary start investing in gold and silver and crypto? Where is the best site? Real One Knows. I cover that inside of my Tech Academy. A link for that is inside of the description. What I would say to you though, and I like to be honest with people, if you are poor, you don't really have any business investing in assets like gold, silver, or any speculative asset like cryptocurrencies. I would encourage you that if you are poor and you are on a fixed or low income, that you invest in skills so that you can become more valuable in the marketplace and earn more money. Gold and silver is for people who are trying to preserve wealth. Silver is for people who are trying to accumulate wealth, because with silver, you're going to get more appreciation. When you look at gold and different crypto, when you look at Bitcoin and Ethereum and nulls, waves, Atom, any cryptocurrency project you want to name, these are speculative assets. They can be down 50% today and up 300% tomorrow. So I would not recommend any poor person to ever be investing in any assets. I would tell you to invest in the most valuable asset you can invest in when you are poor is yourself. That's the most important thing that you can invest in is yourself. And that goes back to, I keep telling you guys, you can take courses on Udacity, on Udemy for machine learning, for Python, for JavaScript, for C, for C++. I get into the IT field for like $10, for $50, for $100. They have courses on those websites. Go get involved in there. I have videos on my channel where I talk to you about, there's OpenCourseWare with Harvard. There's OpenCourseWare courses on MIT where you can learn about Python and machine learning for free right here on YouTube. So let's get to what's happening with GDP. I hope that answers your question, and thank you for the donation. It says a collapse that wiped out 5 years of growth with no bounce in sight. It says the second quarter contraction set a grim record. It would have been worse without government aid that is expiring. So again, this is Orwellian. This is doublespeak because they're highlighting the problem. They're saying this is one of the worst GDP reports in the history of GDP reports, right? This probably is the worst. And it would have been worse if we didn't have government aid. So what they're saying is that we need more stimulus. But more stimulus is only going to exacerbate the problem because that's going to push more wealth to the top because the wealthy are the ones who own the assets, right? When government spends money, governments do not know how to spend money efficiently, right? Governments just throw money at the problem, right? And you have to understand the people closest to the money printer, they get all of the benefits. The people with the connections at the banks, the people with the connections with the politicians, they're going to get all of this money first. You're going to get an extra $600 or you're going to get $1,200 that's going to have to last you for 2 or 3 months. These Fortune 500 companies, through tax breaks and tax loopholes, through lending facilities, they're going to be able to tap into trillions upon trillions of dollars. See, one of the funny things before we get into the article that I found astonishing is that they will make fun of poor people, or somehow there's a stigma when poor people get government aid. They say, oh, you need to pick yourself up out of bootstraps. Why do you have to get so much government aid? Or black people need to go work for themselves. Yet these wealthy mega corporations, these billionaires, all they do is get government aid. Like literally all these Fortune 500 companies do is get government aid to the tune of trillions of dollars. And then they get mad at you, or they try to blame you because you may get food stamps or WIC or SSI or whatever the government program you may be on. Somehow you getting government aid is a problem, right? You're the problem. We have to get you off the government's tit. But yet these mega corporations, they're getting, they're getting tax cuts from Trump to the tune of $1 trillion. They're doing record stock buybacks, right? And then somehow you're the problem. You poor people, you're the problem, but yet they can go get trillions of dollars of aid and bailouts and lending facilities. It's like, it's asinine the way that this is structured. And this is why I said that we have to have, a part of me understands why we need this great reset, but the question is, what are we resetting into? And this is where now, as I put in that post today in the community tab, we have to start asking these important questions. The future is here. We're going into a cashless society, into a digital age. The question you need to ask yourself is, do you want to go into a decentralized digital economy, cashless society, or do you want to go into a centralized version, a tyrannical version, where the government controls everything top to bottom and they watch everything? This is a question that we have to ask ourselves. And this is why this technology, especially crypto, is going to be extremely important, because we have an opportunity now to have a say in how the future will look and how it will be shaped. So let's get to the GDP article. It says the pandemic's toll on a nation's economy became emphatically clearer Thursday as the government detailed the most devastating 3-month collapse on record, which wiped away nearly 5 years of growth. Gross domestic product, the broadest measure of goods and services produced, fell 9.5% in the second quarter of the year as consumers cut back spending, businesses pared investments, and global trade dried up. The Commerce Department said the drop, the equivalent of a 32.9% annual rate of decline, would have been even more severe without trillions of dollars in government aid to households and businesses. So now, let's take a step back. Let's put on our 3D thinking caps. We're investors here, right? We're all about creating wealth here. If it took trillions of dollars to stop the crash, and we still crashed 32.9%, and all of this stimulus is getting ready to wear off, what do you think the next thing the government's going to do? They're going to print more money. I was telling you guys from the beginning, the only way out of this deflationary spiral is to print money. And if you've read the book, The Creature from Jekyll Island, you know this. If you read Jeff Booth's book, of the price of tomorrow, and all of these resources are in my Tech Academy for you guys to go and read, you know the only way out of this is to print more money. So what do you think is going to happen to the price of Bitcoin, the price of Ethereum, the price of nulls, the price of waves? Literally, the entire crypto ecosystem is worth less than $350 billion. Yet the government, right now, they're debating about printing another between $1.5 to $3 trillion. Do you understand how early we are when we think about crypto? This is one government printing almost $1 trillion to $2 trillion on a monthly basis. Printing this. That money has to go somewhere. Where do you think that money's going to flow to? The stock market's grossly overvalued, grossly overpriced. That money's eventually going to flow to crypto. And we're going to wake up one day and the crypto ecosystem's going to be worth $2 trillion, $3 trillion, $4 trillion. What do you think the price of our assets are going to be when that happens? You have to think about that. What do you think the price of gold is going to be as these trillions of dollars continue to keep getting printed time and time again? And as I said before, this isn't just the United States printing money. The Bank of Japan is printing money. The People's Bank of China is printing money. The European Central Bank is printing money. The Australian Central Bank is printing money. Everyone's printing, and that money is going to flow into our assets. We are going to get rich. Trust me, it's going to happen. Now, how will the world look? None of us can really predict that. Let's get back to the article. It says, but there is mounting evidence that the attempt to freeze the economy and defeat the virus has not produced the rapid rebound that many envisioned. A surge in new cases and deaths across the country has led to a renewed pullback in economic activity, reflecting consumer unease and renewed shutdowns. And much of the government support is on the verge of running out, with Washington at an impasse over next steps. They're signaling it to you. If you don't print more money and you don't bail people out again, the economy is going to crash even more. So we've already crashed 32.9%, and that's with, I believe we're up to like 14 trillion now since the coronavirus started, between all of the different programs and lending facilities. So he's basically telling you, listen, you printed trillions and we only crashed 32%. If you let this go away, if you let the unemployment insurance go away, we're going to crash even harder. So we know what's going to happen. Pump, baby, pump. There was one more thing I wanted right here. It says, the economic collapse in the second quarter was unrivaled in its speed and breathtaking in its severity. The decline was more than twice as large as in the Great Recession a decade ago, but occurred in a fraction of the time. The only possible comparisons in modern American history came during the Great Depression and demobilization after World War II, both of which predated modern economic statistics. What have I been saying? What have I been saying on this channel? Go back to when this whole pandemic thing first started. I was telling you guys that this is going to feel like the Great Depression for some of you. And we just lived through our roaring 20s. Before the Great Depression, there were the roaring 20s. And then the Great Depression happened, right? The roaring 20s was a time of economic expansion. Well, we know what expansion is, right? People going into debt. See, the boom and bust cycle. The boom is the problem. The bust is what's necessary, right? Now, we don't know what causes the bust, right? It could be some bank blowing up because they've over-leveraged themselves with credit default swaps and derivatives. That happened in '08. It could be the dot-com bubble blowing up, right? Something pops the pen. Something's the pen that pops the bubble. So the pen that popped this bubble was the pandemic. But the boom is the problem. And then you have this contraction. The rich are able to get richer because they can gobble up small companies, buy assets for pennies on a dollar, and the cycle continues. But we're getting to the point where the cycle can no longer continue. Then it also says the wave of evictions and foreclosures that many economists predicted early in the recession largely failed to materialize, but those programs have expired or are about to do so, and efforts to extend them have been delayed in Congress by disagreements between the parties and among Republicans about how much to spend. So this is why I was saying to you, when you go back to that scene in the movie The Big Short and they're in the casino and they're so happy about how much money they're going to make, and Brad Pitt says to them, do you understand what this actually means for everyday Americans? Like, people are going to lose their job, lose their homes, lose their entire livelihood. That's how I feel when I make these videos. Like, yes, I'm excited that my bags are pumping in crypto. I'm excited that I'm going to become a millionaire. I'm excited about all of the beautiful things that are going to happen to me because I'm invested in crypto, and I've been in this space now for almost 8 years. I'm excited, but I'm also, it's bittersweet because I know what this means for the average everyday person. I know the average person is not prepared for the Great Reset. I know the average person isn't reading the articles. I know the average person isn't watching these videos. I know the average person isn't invested in a My Tech Academy or Ivan on Tech's Academy or any of these places that they need to be getting the necessary skills. I know this. I know most people don't own precious metals. They don't own, any precious metals mining stocks. They don't own any guns. They don't have any land. I know this. And you have to start saying to yourself, what is the world going to look like? Like, yeah, I may be wealthy and I'm going to become successful with all my crypto investments and things that I have, but what about the average person? And, this is something that's going to be interesting when we watch this unfold, because many of you are just not prepared for the Great Reset. And, it's scary when you think about it in some ways, but, it's also exciting as well. Right now, this is the beautiful thing, because you can't endlessly print money, right? Printing money has consequences, right? When you are the reserve currency of the world and you continue to keep printing money, eventually this will catch up to you because other countries are watching this, right? Your creditors who are buying your bonds, they're watching this as well. This will become a problem if you have to default on your debt, because it's going to get to a point where the interest on our debt is going to be the government's largest expenditure, where it's going to cost them so much money to service the debt. It may be $1 trillion just to service the interest in debt. So it says U.S. gets a debt warning from Fitch as stimulus battle rages. One of the world's major credit rating companies fired a warning shot regarding the United States worsening public finances on Friday, just as lawmakers in Washington contemplate spending more to combat the economic fallout from the pandemic. Fitch Ratings revised its outlook on the economy's credit score to negative from stable, citing a deterioration in the U.S. public finances in the absence of credible fiscal consolidation plan. The country's ranking remains AAA. So today, right, our credit rating is AAA. That doesn't mean it will be that way tomorrow. And see, this is all a part of destabilizing the West, right? Because we're grossly in debt. And there's no end in sight of this money printing. I mean, you have people like AOC and Bernie Sanders saying free everything, right? And then you have these mega corporations who they want to keep using the government and abusing the government with not paying their taxes, getting all these different tax breaks, right? Getting bailouts. So this is going to become a problem, and it's going to come to a head. It says high fiscal deficits and debt were already on a rising medium-term path even before the onset of the huge economic shock precipitated by the pandemic, Fitch said. They have started to erode the traditional credit strengths of the United States. I want to repeat that part for you. It says high fiscal deficits and debt were already on a rising medium-term path even before the onset of the huge economic shock. What have I been telling you guys? This was already happening. This was already going on. There was too much debt in the system before the pandemic. They're trying to make it like, oh my God, everything's happening now because of what's happening with, the pandemic, right? If the pandemic wouldn't have happened, everything would have been fine. No, it wouldn't have been. There was too much debt in the system to begin with. When you come here, you look at this debt clock, we're talking about, now we're up to $26.5 trillion. I don't think a lot of you understand how large that number truly is of debt. That's insane. And then now you have the Fed literally, think about it. The Fed is literally buying government debt. So the Fed is printing the money and then basically buying our own debt back. That's a Ponzi scheme. That doesn't even make any sense. And then when you think about unfunded liabilities, we're up to $153 trillion. So when you start thinking about all of these government programs that they have, Medicare and Social Security and these different pension programs, there's no way that these local municipalities and state municipalities and federal, there's no way that any of these government programs are going to be sustainable, right? And if they are sustainable, the inflation rate is going to be so high that it won't even matter. Real one knows. He says, I am a business major working on my MBA and I have a bachelor in English. What type of jobs will be in high demand as a poor person? You keep asking these questions as a poor person. And I'm just going to simply say this again. As a poor person, you need to be investing in becoming more valuable in the marketplace. Going forward, understanding technology is extremely deflationary, and that everything we're utilizing in our lives right now, you're using technology right now to watch this, right? You need to be getting involved in tech. You need to make sure that you're getting involved in technology. That goes back to STEM, science, technology, engineering, and math. That's where all of the job creation is going to be. That's where all of the value is going to be. That's where all of the wealth is being concentrated. That's what we are utilizing. For example, right now, if kids can't go back to school, right, what are they going to be using to learn? They're going to be using some type of application like Zoom. They're going to be using computers, right? That's where it's going to be. You need to be focused on technology, engineering, math, and science. That's what's going to dominate this great reset in the fourth industrial revolution. It's all going to be based around technology. When you look at Elon Musk and you look at SpaceX and you look at Neuralink, when you look at cryptography and cryptocurrencies, when you look at digital currencies in general, if we're living in a digital economy, it's all going to be around tech. And this is why I keep trying to tell you guys, focus on technology, focus on science, focus on engineering, focus on mathematics. I'm not saying that English won't be in demand. I'm not saying that your MBA won't. I'm just telling you, if you follow the trends and you follow where the wealth concentration's at and you follow where the job opportunities are, that's going to be in technology. That's where I would steer you guys to. Right? And if you really want to learn, get in the academy. Thank you, Courtney Gibson, for that. That's where you need to be, in the academy. So let's get back to this article. It says, unemployment has skyrocketed, and the United States economy just notched up its worst quarter on record, with pandemic-related shutdowns helping drive an annualized gross domestic product contraction of 32.9% in the 3-month period through June. So, this is really, it's getting to the point where it's starting to accelerate. Now, another prediction that I said, go back months ago, watch my videos. It says the bankruptcies, right? I told you guys that we were going to see a ton of bankruptcies come through. And it says retailers, airliners, restaurants, but also oil producers, fitness centers, and a prom dress retailer. These are some of the more than 160 companies that declared bankruptcy in the United States this year that blamed the pandemic in part for their demise. Many Many were in deep financial trouble even before governors ordered non-essential businesses shut to help contain the spread of the virus. Most will try to reorganize and emerge from court smaller and less indebted. The hardest hit, however, are selling off assets and closing for good. As I've been telling you guys, too much debt. They were over indebted, too much debt in the system. Then now you start thinking about technology. Think about Amazon. Think about what Amazon, how they've decimated the whole strip mall industry, the strip mall businesses. People prefer to just buy their stuff online rather than go to malls. So think about how many jobs are being destroyed when all of these strip malls are going out of business. Right here in New York City, Hudson Yards is one of the largest projects in the world. Neiman Marcus basically closed their store. And they're in an affluent neighborhood. Like Neiman Marcus is not a store that every day, people go to. So this is a luxury goods store. And they're even feeling the crunch because everything's going online. Well, what does that mean? Technology. That's tech. That's big tech. Wiping out businesses, wiping out jobs. So now you have to start thinking, what does that do to those local economies when those strip malls go away? We see JCPenney filing bankruptcy, right? We're watching these things happen. It says, they include plenty of big iconic names. Hertz just recently filed for bankruptcy, and Brooks Brothers, and now California Pizza Kitchen, which operates more than 200 restaurants. The vast bulk, though, are small and medium-sized businesses scattered across the country. Their downfall might not normally garner much attention, but it does underscore the full extent of the damage the pandemic has inflicted on the economy. The list compiled for this story is based on court records, statements, or interviews in which business owners explicitly linked the virus to their filing. It is only a snapshot of thousands of corporate entities that have landed in bankruptcy court since the pandemic took hold in March. And it doesn't capture the countless businesses that closed shop permanently without seeking protection in court. And you can see these are all of the different companies: Denbury Resources, Noble Corp, Ascena Retail, Chesapeake Energy, American Addiction, Bounce for Fun, Sugarloaf, thousands of companies. These are just major companies. Right? It says the companies that have sought to reorganize or liquidate, at least partly because of the pandemic, run the gamut of corporate America. Some had billions of dollars in assets. Others only had a handful of employees on payroll. Some, like apparel company Ascena, had stores dotting suburban malls across the country. The owner of the Ann Taylor and Lane Bryant chains is now considering closing more than 1,000 stores. When you close 1,000 stores, those are jobs that are not coming back. So when a lot of you think that we're just going to get a vaccine and everything's going to go back to normal, you're kidding yourself. If you believe that, one of these companies, they're going to create a vaccine and everything is going to go back to normal, you're kidding yourself. This is our 9/11. Think about how the world looked prior to 9/11. And then think about all of the legislation and the policies and the things that happened. The TSA. The TSA didn't exist to the capacity that they exist today. Think about the Patriot Act. Think about all of the different government agencies that were created based upon 9/11. And then there's Gold Gym, the iconic fitness chain that furloughed almost 4,600 employees after the lockdown. It's now being bought out of bankruptcy by the Berlin-based owner of the McFit chain. Listen, I've been telling you guys this for a very, very long time. You need to make sure that you are paying attention to this stuff because it's happening. It's happening. And these jobs are not going to come back. Think about what this is going to do to the commercial real estate market. Now think about banks that are holding that commercial paper. Then think about the derivatives that are backing that commercial paper. What are going to be the domino effects? What's going to be the collateral damage? You have to think about this. And here we go now. The beautiful thing. Gold sets fresh record heading for the best month in 4 years. Gold surged to a fresh record fueled by dollar weakness and low interest rates. Silver headed for its best month since 1979. Spot bullion is up more than 10% in July, heading for its best month since 2016 as the United States real yields lingered near record lows, while the ferocity of rallies in both gold and silver cooled in the middle of the week. Most market watchers predict there may be more gains ahead. Both metals have added about 30% this year, and gold and silver exchange traded funds boosting holdings to a record as concern about the fallout from the pandemic fuels demand for havens. The Federal Reserve this week repeated a vow to use all its tools to support the U.S. economy, with governments and central banks worldwide already unleashing vast amounts of stimulus to shore up growth. What have I been saying? I've been telling you that this is going to keep happening. And they're saying it right now. Vast amounts of stimulus is being deployed by all governments. The Fed's saying they're going to use every tool that they have. Every tool means they're going to print as much money as they can and send it to wherever they can. And when we come over here and we look at this, silver sitting at $24.21. So if you listen to me, you would be up well over 30% on your money. And some of the assets I promoted, you'll be up over 100% on your money. And I'm not saying that because I'm giving you financial advice. I'm not saying that because you should listen to me. What I'm saying is that you should hear what I'm saying and then go and do your own research. What I'm saying to you is that you should go and do your own due diligence when a person is presenting information to you. And then now what I'm saying is that I should be able to build some credibility with you based upon the things that I've been saying and watching them unfold is what should happen. Because when this crash happened down here and we went down to 12, I told you buy more. I told you buy more, and I told you to buy more. And many of you were coming onto my video and you were calling me a scammer and you were calling me an idiot and you were telling me that I don't know what I'm talking about. And now here we are, we're watching silver explode. We're watching gold explode. We're at $1,973 as of today. Bitcoin's now starting to break out. We're at $11,280. Look at Ethereum. We're at $345. Exploding. Breaking out, blowing through the seams. Look at my precious metals mining stocks that I was telling you guys about. If you look at the options table, it's insane. Look at the 7-day change in Ethereum. We're at what, 23% in a week? Let's look at the month. We're up 50 for the month right now. If you joined my Tech Academy and you were listening to me and you went through the courses that were created to teach you the basics, 53.7%. 53%. And yet I have people coming on my videos and telling me I'm a scammer and I'm a schemer and I don't know what I'm talking about and I'm an idiot. You know, you laugh at the ignorance that people display on a daily basis. You laugh at it, you know, because You need to be paying attention to what's happening. You need to be getting involved in this wealth transfer if you can afford to, right? If you're poor, you have no business investing. I tell you this all the time, guys. If you're poor and you don't have any wealth, you should not be investing. You should be investing in skills to become more valuable in the marketplace. One second. This always happens when I try to bring things over. 1 second. Right here, I made this post. When I posted this 6 days ago, I posted this. I said 7 months ago, I told you guys about investing in Ethereum when it was trading at $143. Now it's sitting just below $300, meaning you would have doubled your money in less than a year. The beautiful thing is the bull market hasn't even started yet. What separates me from most is that I put my money where my mouth is. A wealth transfer is happening. Don't miss out on this opportunity of a lifetime. When I posted this just 6 days ago, Ethereum was trading at $294. $294. Now it's at $345, and it's still undervalued. Now, I'm not telling you to buy a pump. This is where dollar cost averaging comes into play. And I'm going to create a course about teaching you guys how to, properly enter a market, right? You don't run into the market and, rush and buy something that you shouldn't be buying. You take your time when you are deploying your capital. You wait for pullbacks to enter into the market, right? You have to be smart in how you time the market and you enter into the market. And you have to make sure that you're also protecting yourself on the back end and being really smart in how you deploy capital. Can people attempt to do both? Invest small and invest in employment. Of course you can do both, Jay Green. I'm not saying that you can do both. What I'm saying is that I want to promote things that I know is going to make sense for people. And I'm not going to ever recommend that you do something that I don't think is sound, right? And I personally, you could put your money into, Rand or, Chainlink or something like that when it's at 30 cents and it can go to $7 and you can make a lot of money, right? You could have a lottery ticket mentality, right? You could have purchased Chainlink at 30 cents and put $1,000 in it and made a lot of money. I'm not going to recommend that, right? Like, I have to stand by my principles. You can do that if you want to. I'm just not going to recommend that, right? I'm going to do my best to recommend things that I feel make sense to people. That's what I try to do. I try to do my best to recommend things to people that will make sense, and people can protect themselves, right? I don't want to ever I don't want to turn my channel into a buy this coin and all your problems in life is going to be taken care of, or we're going to stop white supremacy and racism if you just buy my course. Like, I don't want to be that guy, right? I want to be ethical in what I pitch to you guys. I want to be honest in what I say to you guys, because I want to build a track record of integrity with integrity and principles. I don't want to be that guy that's promoting garbage to you. I don't want to be that guy, and I'll never be that guy. I want to do my best to give you guys the valuable information. Brandon Hicks says, so Elijah, with Bitcoin being so volatile, do you believe it will go back under 10K? Anything's possible. Anything's possible, especially being that right now crypto is heavily correlated to the stock market. But when you see, what a lot of you don't understand is that a lot of you are saying, well, Bitcoin's volatile, right? And I'm not talking about you, Brandon Hicks. I'm speaking in general. A lot of you forget that this asset's only 11 years old. This is a baby. It's not matured yet, right? See, when you take a step back and you start understanding that we're dealing with a baby. We're not really dealing with the stock market that's been around for, 100 years, 100 plus years. We're not dealing with a company like Apple that's been around for 20 plus years. Like we're not dealing with a mature asset yet. We're dealing with something that's a baby. It's an infant. And then when you understand that this is a new technology, we have so much more room for growth, for things to happen. We're early. Like I said, like this is like investing in pets.com back in 98. We're in the Netscape days. Think about how far, the internet has grown and come from since then. Like we're in the Nokia brick phone era right now. When you think about like technology, like think about how far cell phones have come. We have so much room for growth. And when you understand, especially DeFi, when you look at this, and I've showed you guys this article before, like when you think about Legos, where's the picture at that I want to show you guys? This is not it. Give me 1 second. I want to pull up something for you. I want to show you something. I think I have it on my computer. Let's close this. Let's open up this. I believe that I have some articles in here. Boop. I think I have some articles in here. Can't get this thing home over here. There we go. I have a list over here. There we go. I believe this is there we go. This is the article right here I want to show you guys. Get this out the way. Boop. All right. When you understand this and you start understanding that Ethereum's like Legos, where it's a software platform and you're building so many applications on top of Ethereum, and you start looking at, Maker and Compound and Invo, the application layer, and Uniswap and AirSwap, and you start looking at all of these different applications that you're going to build. If you go through the cycles, right? Ethereum was created in 2015, July 30th. And then we had the whole ICO craze, right? Everyone was jockeying and fighting for who's going to be the next Ethereum, or every ICO that was launched on top of the platform, right? So we had a bunch of horizontal competition, right? Everyone was trying to compete to be the next Ethereum, or everyone was trying to compete to be the next Bitcoin. And you had all of these crazy garbage coins, launching these different ICOs. That was the whole 2016, 2017 phase. That was the horizontal phase, I call it. Well, now we're going to go vertical now, right? So when you start looking at this is vertical integration. This is vertical growth, right? So now the market is starting to say, okay, we look at Ethereum now as the application, right? That's going to be the protocol that's going to be used to build applications, right? The marketplace is saying that now, right? With their capital and with their intellectual capital. If you look at the amount of developers and projects and things that are being built on top of Ethereum, the marketplace is giving you consensus now. They're saying we're going with Ethereum. So this whole idea that like it's not going to be like 2017 where every piece of garbage is going to moon. We're to the point now where we're consolidating now, where it's put up or shut up. No more vaporware. Either your chain works, your main net works, or it doesn't. Right? And that's where we are right now. So now, Frankie Cow said gold is better than Bitcoin. In what way? In what way is gold better than Bitcoin? Right? Bitcoin's deflationary. Right? After 2140, there will be no more Bitcoin. Gold has inflation. Gold has an inflation rate of about 1% per year. Secondly, you will always have to trust a third party with your gold. Always. If you're going to live in a modern economy where you're going to be doing business, you're going to walk around with 2 tons of gold on you. When you want to go and buy a house, how are you going to buy the house? Are you going to walk in there with all of your gold coins and bars? It's too heavy. So what happens? you have to actually trust it. Gold has nothing backing it. What backs gold? And you know what? I'm glad you said that, Frankie Cal, because what I would encourage you, Frankie Cal, to do is I think that you need to go and read the Bitcoin Standard. And I'm going to pull up a passage, and I'm, glad you said that. So this is from the book, The Bitcoin Standard, and I want to read something to you. So it says, whereas an Austrian economist Menger's time, the criteria for determining what is the best money revolved around understanding scalability and what the market would choose as money. In the 20th century, government control of money has meant a new and more important criterion being added to scalability, and that is the scalability of money according to the will of its holder and not some other party. Combining these criteria together formulates a complete understanding of the term sound money as the money that is chosen by the market freely and the money completely under the control of the person who earned it legitimately on the free market and not any other third party. While a staunch defender of the role of gold as money during his time, Ludwig von Mises understood that this monetary role was not something inherent or intrinsic to gold. As one of the deans of the Austrian tradition in economics, Mises well understood that value does not exist outside of human consciousness, and that metals and substances had nothing inherent to them that could assign to them a monetary role. For Mises, gold's monetary status was due to the fulfillment of the criteria for sound money as he understood them. The sound money principle has two aspects. It is affirmative in approving the market's choice of a commonly used medium of exchange. It is negative in obstructing the government's propensity to meddle with the currency system. What does that mean in plain English? Let's take a step back. Number one, the marketplace determines what is and isn't money. Gold wasn't used as money because it should be used as money. It was used as money because of the properties that it had. Number one, you didn't have to worry about it rotting. You didn't have to worry about it spoiling. So you couldn't use like cattle and other commodities as money because they spoil. They would rot. You can't print more of it. So the alchemy behind it gave it value because it was limited supply. That's what gave gold its value, its principles. But now we live in a digital age. We don't live in 1600, the 1500s, where people are going to be walking around with a bunch of gold bars. We don't live in that economy anymore. So now what happens? If you own gold and we go back to a gold standard, we have to trust third parties, which leads back to the same problem. This is why gold has always failed as well, because you have to trust a goldsmith or a bank or a third party to hold that money. Hold that gold. Well, guess what happens? They give you a paper certificate. So they say you have one gold bar, you get one paper certificate. Now the goldsmith got smart and the goldsmith said, hey, I have 10 gold bars and I've written 10 gold paper certificates, but no one comes back and checks on their gold. So the goldsmith starts doing what? He starts writing more paper claims against that gold than he actually has. So now he creates 20 paper certificates, 30 paper certificates, which are claims on gold because he's holding the gold for you. Then one day everyone gets suspicious and they come to the goldsmith and they say, we think that you're doing something illegal. Where's our gold? And he opens up the vault and he says, see, look, I didn't do anything wrong. The gold is still here. And then guess what happens? A bust happens. Everyone comes running to the goldsmith or the bank. They want their gold. The problem is there's more paper certificates than there's gold. There becomes a run on the bank. This is why gold will never work in a digital economy. Because guess what? If I want to buy an item that's all the way in Europe, how is the gold going to get to Europe when I buy it? I have to then send it through a helicopter, through some type of a shipping method. Well, now I'm trusting that third party with my gold. Who's to say that that third party won't take my gold and keep my gold? Now, with cryptocurrency, we're dealing with a digital asset. We're dealing with a digital asset that has digital scarcity. If you come here and you read the stock to flow model, I believe I have it somewhere here, right? You look at the stock to flow model, gold has a supply growth. It has a supply growth of 1.6%. Silver has a supply growth, meaning that it has inflation. It has a small amount of inflation, right? So gold's inflation rate is 1.6% on a yearly basis. Silver's 4.5%. Well, let's look at Bitcoin's inflation rate. After 2140, there will never be any more Bitcoin. After that last halving happens, there's no new Bitcoin after 2140. So now when you understand that and you start really putting that into your mind, now you start seeing yourself, okay, this is powerful stuff here because gold isn't as portable, right? The scalability is not the same. So this is why you need to go and you need to, oh, matter of fact, I'm so sorry about this, guys, because I'm still on the iPad screen. That happens to me all the time. All right, I was showing you the inflation rate right here, right? The inflation rate for gold is 1.6%. And for silver, it's 4.5%, right? Because they still are finding more gold and silver, right? They're going in the ground to get it. The inflation rate's much lower than fiat currencies, but there's still inflation. Well, with Bitcoin, we can look at the inflation rate and we can see after 2140, we know there will never be any new Bitcoin issued. We know that. There will never be more than 21 million Bitcoin. And we know this and we can verify this in the source code, right? So we don't have to guess. There is no inflation in Bitcoin after 2140. So it's important that you really get that. Now, gold is hard money. It's an asset. It will always be an asset. But we're never going back to a gold standard. Everything's done digitally now. Can you imagine buying an item and having to ship your gold coins? So the whole purpose of Bitcoin is having a trustless system where you and I can exchange value in a trustless way, where you cannot double spend. See, Satoshi solved the double spending problem. So now you have digital scarcity. And that's one of the most powerful things. So I would encourage you to go and read the Bitcoin standard and educate yourself about money, because the marketplace decides what is money, right? Gold isn't money because it's just money. Gold wasn't created to just be money. It was determined by the marketplace that would be the best form of money in that economy at that time because of the properties that it had. As I said before, that you couldn't print more of it, that you can't just use alchemy and create more of it. Oh, I like what EJ him said. He said also the vault holding gold is fake gold. He already sold the real gold and replaced it with fake gold. Yes, and that was one of the problems that we constantly kept running into with gold, is that the government would debase it. I believe it was in Rome. They would actually like add other metals into the gold. So like you would have gold coins. They would like clip the coins and they would add like other elements into the gold. So they would take like another metal and infuse it in the gold and then like remint it. So you had to always worry about that. Then think about it. How do you know that gold bar is real? Right? Like if you are giving a gold bar or a gold coin, can you within a matter of seconds or minutes verify that gold bar is real? No, you can't. Right? You would have to take it somewhere and you would have to perform some type of test on it to verify if that gold bar is real. With Bitcoin, I can just simply look at the hash ID, right? I can look at it and I can look at the digital signature and I can tell if whether or not this is a valid transaction or not. I don't have to worry about some third party, verifying this transaction for me if this is a legitimate transaction or not. I can go pull up the Block Explorer and look at it, right? So I can look at the transaction ID, I can look at the hash of the transaction, and I can look at the digital signature. Right. So, you need to go and educate yourself just a little bit more, Frankie Cow, about Bitcoin and its properties, and understand why it's powerful. And now think about government censorship. Governments, if you're trusting a third party, and this is what Peter Schiff gets wrong all the time, and him and Mike Maloney, this ends the whole gold argument right here. If you're trusting a safety deposit box to hold your gold, or if you're trusting some type of third party to hold your gold, the government can just come in there, kick in the door with their guns, and say, we're seizing this, and there's nothing you can do to stop them. Bitcoin is a protocol. It's a language. You can't seize it. It's everywhere, right? Because it's just characters. It's numbers, right? And when you understand that it's a language, you can't ban a language. You can't stop it. You can do Bitcoin transactions through text message. You can do Bitcoin transactions through email. You could do Bitcoin transactions with a smoke screen. You could do Bitcoin transactions with SOS, right? It's literally, it's a language. How do you know I own Bitcoin? Well, with KYC you do. But if Bitcoin was being used the way that it should have been used, right, we would have more privacy. See, we're corporatizing Bitcoin. We're messing Bitcoin up because many of us, we lack the technical capabilities to properly use Bitcoin. And that's one of the problems. And that's what I was saying before. Now we get into, are we corporatizing Bitcoin? Because Satoshi didn't envision us to use Bitcoin through centralized exchanges. It was meant to be a peer-to-peer currency. It was not designed to be purchased on Coinbase. So this is where we run into the problems where many of us in the community, we don't do a good job of educating people about this technology and educating people about how to use the technology properly. That's where we messed up at, because many of us, we want our bags to pump and we don't care. So, that's the give and take that we have to balance. Let me take a sip of water. My mouth is getting dry, guys. I'm not taking any profit on any of my Bitcoin positions, Courtney Gibson. I'm not selling any of my Bitcoin anytime soon. We have a long way to go. When you hear about trillions of dollars being printed, and you come up here and you look at the market cap, this is the entire market cap of all cryptocurrencies, the entire ecosystem, and we're talking about $339 billion. I'm not selling anything anytime soon. When we come over here and we look at DeFi Pulse, let's pull up DeFi Pulse. You come over here and you look at DeFi Pulse. Look at this. Every day when I make these videos, and I say to you, total value locked in DeFi, it was 2 billion, 2.5 billion. Then it was 3, then it was 3.5. Now we're almost at $4 billion. That's tiny. Do you understand how insignificant and tiny this is as an asset class? No, you can't ban Bitcoin like that. This is why, Frankie Cal, I would encourage you to join my Tech Academy. And I cover that stuff for you, and I'll teach you about that in the academy. I've answered your questions enough. I'm gonna some other questions, Frankie Cal. I haven't looked at SpendCoin. Like I said, my bags, most of the crypto out of my bags are Bitcoin, Ethereum. I have a little bit of Cardano. I sold a lot of it because it's just, I don't really believe in the project anymore. Not saying it's a scam though, but I have a bag of Tezos, nice bag of Tezos, nice bag of Monero. Monero is my favorite. Monero is better than Bitcoin as far as privacy is concerned. Monero is actually private. It's true anonymity with Monero. It's, to me, Monero is the best currency, cryptocurrency when it comes to privacy, because it's actually private. That's going to be the next course that I'm going to be creating. VeChain, I have a bag of VeChain. I'm happy VeChain is pumping. I have a nice bag of VeChain. I have, is it Neo or Nem? I believe it's Nem. I have either Neo or Nem, one of the two. Atom, I have a bag of Atom. Bag of Ontology, bag of basic attention token, and it's not doing too well for the month, as you can see. What else? I have a bag of 0x. I'm at 15% for the month. Look at Elrond. I had a chance to get into this too. I wish I would have gotten in. I didn't get in. Bag of Augur. Big bag of Augur. What else? What else do I have? I have a little bit of waves. Nothing crazy. And anything else in the top 100 I have? I still have some Steam from when I used to post on Steam it. I still have some Steam there, but Steam is garbage. Like, just in some with Tron, I have Matic because I believe in the layer 2 solutions. So I have some Matic, and that's about it for the top 100. And then I have like some garbage coins from that I got suckered into in 2017, but nothing crazy. I consolidated most of those into Ethereum. Like most of my losing coins that I had, my losing positions, I've basically sold them and put them into. No, I never got into Chainlink. I always wanted to get into Chainlink. I thought I was in Chainlink because like I have so many different ledgers and so many like different projects and stuff. So no. What stopped me getting in? What stopped me from getting into the project was that when I was looking at the team, I didn't think that the team was robust. Like right now, I'm heavily looking at the whole Polkadot thing with Gavin Wood. I like the Polkadot project. I want to create a course about that. I really believe that this whole interoperability and being able to go cross-chain is going to be really, really big. Because like if you look at Uniswap right now, Uniswap is doing so much volume, and like being able to swap between different ERC20 tokens is extremely powerful. But imagine being able to swap across different chains and be able to combine chains. So that's really good. Like, so I'm looking at that, the whole interoperability of being able to go cross chain. But I just when I was looking at your question, to answer your question, like when I was looking at the team, I just was like, I didn't really like the team just didn't see that robust. Like when I look at other teams and people behind a project, like Polkadot is big because, Gavin Wood helped create Ethereum, and for those of you who don't know who Gavin Wood is, I'll pull up his Twitter, so like when I see people like that, like same thing with Cardano, that's what attracted me to Cardano was, with Charles, was the fact that he worked on the Cardano project with Vitalik. That's what got me interested in the project from the beginning, because like, obviously he knows the problems with Ethereum, because right now, we know that ETH can't scale, but this is Gavin Wood right here. So, and right now they're having a token sale for Polkadot. I would definitely encourage you guys to get involved. But many of you, if you live in the US, you can't get involved. I think they closed the window too anyway, but definitely go check him out. And check out the Polkadot project. There's a donation. How do you feel about our political situation with Trump calling for delayed election? Do you think things are edging towards a dictatorship? We already live in a dictatorship. So this whole idea about freedom, we already live in a dictatorship. So I would definitely, I would not say that this is a free and open society in any way. Especially once you understand like the NSA and you go back and you read WikiLeaks and you read, Eric Snowden and the information he was able to put out, where your cell phone is listening to everything that you're saying, where your Alexa devices are listening to you and your information is being stored in databases. There's nothing free or open about this society at all. Then when I look at the elections, the delayed election, I understand why he wants to delay the election because of the whole, voter fraud. Because let's be honest, there's no way that Joe Biden can beat Donald Trump. Joe Biden clearly has dementia. He's clearly not coherent in the way that he puts together his sentences. He's not coherent in his thought process. Could you imagine him being on stage with Trump? Right there's no way that he can beat Trump in a debate. He can't even remember what to say. So the only way that the Democrats can win is by cheating. That's it. There's no way that the Democrats are going to beat Donald Trump with Joe Biden if he gets on the stage and debates him. So they're going to have to try to utilize voter fraud. So that's where realistically where we would go. Now, that doesn't mean that Trump isn't trying to be a little dictator himself either. What do people with power want? They want more power, right? Like you've never seen a person say, hey, I have all of this power, but I want to give it up, right? Power corrupts. How the saying goes, power corrupts and power corrupts absolutely or something like that. So listen, people want more power. They don't want to just stop. So listen, when you look at Republicans versus Democrats, it's just the left and right wing of the same bird. I don't get caught up in this whole left wing versus right wing politics. They're both the same thing. They're not, they're not the same. So Frankie Kyle, you've existed long enough. I definitely have to get rid of you. Thank you for your service, for participating in the chat, but it's time for you to go bye-bye and block you. So thank you for participating. Have fun on a block list. Make another profile and come back later and troll later. But yeah, I don't get caught up in the whole left and right paradigm. Like, Republicans are corrupt and Democrats are corrupt. Neither party cares about people. And when you understand the biggest, the bigger picture, and you understand the Great Reset and the Fourth Industrial Revolution that we're going through, the pandemic, and you look at social unrest, you look at income inequality, you look at the death of the dollar, you start looking at all of these different things that are converging at one time. You start looking at how fast technology is growing and expanding. You start looking at nationalism. Like, all of these things are happening, right? They're all happening at the same time. You need to pay attention to these things and just stop getting caught up in the whole like Republican versus Democrat thing, because none of them truly have answers to the problems that we have, right? It's all about trying to extract more power and more resources for them and their friends and consolidating power. So, and like I said before, crypto gives us that chance to be able to, fight back. Right? It's giving us a chance. So we have to make sure that we, don't mess this opportunity up. Yes, you have access to everything. If you come in at the top tier that I created. See, that's a good question, Ryan, Glenn. The way that I envision this to work, there are no more lifetime memberships, right? All of the lifetime memberships have been purchased. So there's no more lifetime memberships. Those of you who have the lifetime membership, you're fine. You don't have to ever pay for anything else ever again in the Academy. We had 20 slots. We sold those 20 slots. And then I refunded 3 people, and then 3 more people purchased. So we're done with lifetime memberships. Going forward, the way that we have this structured is if you come into the top program, so let's pull it up here so I can help you out. Let me take a sip of water. So let's pull this up. So let's pull this up right here. Let me take a sip of water. Sorry about that, guys. So the way that we have this structured is that we are first going to start with the JavaScript. We're starting with JavaScript because eventually we're going to go to Solidity. Solidity is the programming language that Ethereum utilizes to create smart contracts and dApps. And we're going to start building dApps. So we're learning the basics and fundamentals of JavaScript. We're going to build a few programs in JavaScript, so a few applications in JavaScript, and then we're going to eventually go over to Solidity. And we're going to be focusing on trying to put together a portfolio for you of projects so that you can go and get your hustle on to go try to get either be an entrepreneur in this space and build some stuff, or you're going to go out here and try to find employment opportunities. That's what we're focusing on. Am I guaranteeing you that I'm going to get you a job? No. But what I'm saying is that if you don't believe me, right now, go on YouTube. If you type in JavaScript tutorials, you will find thousands of videos of people teaching you about JavaScript. If you type in Solidity, you're not going to find a lot of videos of people who are teaching you how to program and develop applications with Solidity. So that's what you're paying for. You're paying for the boot camp that we're going to go through. That right now, the video content's already up. We're adding new content every day. I just put 6 more videos, tutorials inside of the JavaScript course. And then eventually we're going to get to Solidity and start really working on building dApps, decentralized applications. Why? Because if you understand that we're only a $300 billion market cap, you see how DeFi is exploding. There's only $4 billion locked into DeFi. You can now start going out here and building your own dApps. So that's what we have right there for the Diamond platform. But there are no more lifetime memberships. So, but the coding bootcamp, you get access, as it says right here, you gain access to all introductory level content. We have our bi-weekly live Q&A sessions. Then we're going to have more premium content, as I said before, with other programming languages. We're also going to have a course on cryptography for people in the Diamond membership. So, but this is yearly, right? This is not lifetime. The lifetime memberships are done. There's no more lifetime memberships. Those are over. So, and then we have platinum, right? Platinum is just where you basically for the year, you could pay $450. So rather than paying $600, that's $50 per month, right? So if you paid $50 per month for the year, it would come up to $600. You could pay $450. So you're saving 3 months worth of subscription. So basically your monthly price, I believe, is like $37.50 instead of paying $50 a month, which I think is a deal. Because as I said before, we still have more courses that are going to be coming into the introductory level courses. So we're going to have a course on, I said now, at first I wasn't going to do Tezos, but I'm about to do a course on Tezos. But the first course that's coming up now is going to be on privacy coins like Monero, Grin, and Zcash, so that you can see the difference between those coins and the technology. These are introductory level courses. These are just meant to onboard you. These are not courses that are really going to dive deep into like the mathematics and all of the stuff behind it. That's going to come later. No, I'm never offering lifetime memberships anymore. That was just for people who wanted to get involved. I won't do that anymore. Right? There's 20 people, because you have to think about it. Like, I envision this academy being around for the next 3, 5, 10, 15 years, however long I'm going to be doing this. I don't, that wouldn't be fair to the people who paid their money to, then come right behind them and offer lifetime memberships again, right? That was a deal for people to get started. And I wanted to see if there would be demand. So to those of you who became lifetime members, thank you. And that's why I'm doing my best to fulfill what I can. But like I said, for $1,000 for the year, that's a steal. That's a steal. Because if you've been listening to me, just think about it, right? If you've been listening to me, you've made money, right? So if a person's teaching you something or telling you something that's making you money, $1,000 for the year is nothing. It's peanuts, right? Now, again, like I said, if you're poor, this is not for you, right? I'm not, like, if you're a black person or Asian person, whatever your ethnicity may be, if you're poor, I'm not telling you that you're going to buy this and you're going to get rich. No, what I'm saying to you is that this is for people, if you have some disposable income and you want to learn about crypto so that you can be an investor, get the gold membership. If you're a person who wants to get into the whole development and deploying smart contracts and learning about the technology and how you can use this technology to be an entrepreneur, or go seek employment in crypto, then you need to be, getting into the coding bootcamp. I started posting job opportunities inside of the, inside of the academy, because there's a ton of job opportunities. But again, understand that a lot of these job opportunities, you need to have some experience in crypto. Well, you're getting experience in crypto now. Same thing with web development. There's so many opportunities in crypto. from a job perspective, from an opportunity perspective, as far as entrepreneurship, like there's just a ton of opportunity, right? So that's all I can say to you. If you've been listening to me, you've made money. You've purchased Bitcoin, you've purchased Ethereum, you've purchased silver or gold or some type of a mining stock, or 0x or Link or Chainlink or whatever the case may be. You've made money off of things I've been talking about. So come back with me and spend some money. And just to answer your question, Gerald Parker, I offered 20 lifetime memberships, so I was able to sell those quick. hmm I don't ever think that Bitcoin will be mainstream, Jimmy Buckets. I don't ever believe that Bitcoin would be mainstream. Just like I don't think gold will be mainstream, right? You know, most people just, how can I say this without being mean? How can I say this in a nice way? Um, most people don't want freedom. They may say they do, but most people want to be told what to do. And this is why, fiat currencies will always exist. This is why government will always exist. This is why dictators and tyrants will always exist, because, people are lazy, and they preached they want change and the need for change, but they really don't like for things to change. So, Bitcoin to me will always be sort of like a competing currency with like government currencies. You know, I don't see it really becoming like mainstream where like everyday people are just using it. I feel like everyday people will have access to use it because it's permissionless, but most people are always going to gravitate towards some type of government money or controlled money. That's just people. People like to just be controlled and ruled and dominated, and it's sad to say, but that's just people as humans. This is why dictators have existed throughout the history of mankind, and it will continue. This is why governments continue to rule for a certain amount of time and then they collapse. It's inevitable. The Roman Empire collapsed the same way, right? Byzantine Empire, Ottoman Empire, right? It's just this human nature as people. So Satoshi gave us a way out. He gave us something, a neutral form of money, so that if you don't like what your government's doing, now you have an option. See, before we didn't have an option, and I think that Bitcoin is going to be an option. I don't ever think that it's going to be mainstream and everyone's just going to be using it. I don't envision that. I envision it as just being an option that can compete with government money. The same way that we were able to separate church from state, we're going to be able to separate money from government, right? So I want to make money, but Bitcoin is speaking a language I cannot understand. You'll understand. You just have to put your time in, right? You have to think about it. Think about this. I've been doing this now for 8 years, and I'm still learning new stuff every day. Like I told you guys, I'm getting into the whole ZK rollups and ZK snarks and zero knowledge proofs. This is something new that I'm learning as well. You just sit down, you read it, you study it, you play with the technology, you talk to other people who are knowledgeable in the space, and you grow, you learn. No. We're using Visual Studio Code to program. I mean, that's a lightweight application. It's free to download. Darius Harper. The book, the JavaScript book, it's in there. It's free. It's a PDF book. You can purchase the textbook if you want, but I have a free PDF link for the book. With Ethereum, we're gonna be downloading, Node.js, npm, Infura, Node. All that stuff is free. Like we don't Ganache, like all of those different things, all of the different tools that we're going to be using for Solidity. Those things are free. I mean, there's paid versions if you really want to scale up, but like to learn, like all you need is just your computer. Like that's it. All you need is your computer and actually just sit down and do the work. Like that's the most important thing that I have to keep stressing to you guys about because a lot of you haven't even finished the Bitcoin course yet. Like there's a lot of you who haven't even finished the Bitcoin course. Because I believe like as of today, we're probably at like 120, maybe like 130 students, maybe more. So we're definitely growing. Like the academy is growing phenomenally. We just launched it. What is this? This is July we're in. So we launched it June 12th. So we're like a month and a half in, and we're already well over 100 students. So the academy's growing, which is good. I just need you guys to finish the courses and get engaged in your community. And I understand that this is a difficult subject, and I know some of you have children and work and stuff like that. So I'm not trying to pressure you, but get engaged in this stuff, man. I'm telling you, you're missing out on gains. You're missing out on pumps. You're missing out on just learning about the industry, because my job is to onboard you. And then once I onboard you, you then can leave the academy and go seek, more advanced information. You may want to go to maybe even go to school or take a Udacity or Udemy course on cryptography or blockchain technology. That may go into way more depth than the academy may do. So my job is just to, for $50 for the month, if you do the monthly membership, my job is to basically give you some, introductory level information, onboard you, teach you how to use the technology. And if you like it, you take it as far as you want to. I played in stocks. I learned how to trade stocks with S&B Capital. I told you guys. I just prefer futures because, see, the problem with stocks, this is the problem that I had with stocks when I used to day trade stocks. I made money day trading stocks. But every day you wake up, you have to find something new to trade. Right? Every day you wake up, you have to find something new to trade. And it's hard to do that. Like, you become scattered. Like, with futures, you find one or two products that you like to trade, one or two instruments, and you just master that instrument, right? So I like to play with the crude oil futures and the NASDAQ futures. And sometimes I would dip and dab into the S&P 500, right? But mainly I was focused on the crude oil futures. Once you master like that market, you understand how that market moves with futures, right? And there's less algos. So there's less high frequency traders in futures. Like, and when you start playing in the stock market, when you play with those algos and those high frequency traders, man, they'll eat you up. There's a lot of noise in the stock market. You don't get that in futures, right? Because the futures market is a deep market, it's a liquid market, and the leverage that you're able to get with margin is crazy. So. Right. It's just so much easier for me. And then once I developed my system, it was just like, it's like trading. Let me take a sip of water. Give me 1 second. I look at trading futures, like imagine having a shotgun and having a bunch of fish in like a bucket. It's easy to shoot. Like it's easy to hit the fish. You have a shotgun or a musket and you're shooting it in a bucket, versus imagine having, a sniper rifle, but you're trying to shoot something in the ocean. Like the stock market's an ocean. There's literally thousands of stocks, and every day, you have to find something that's moving, right? Because you can't trade Apple every day. You can't trade Tesla every day because there's some days it doesn't move. And especially with like stocks like Tesla, those bids, the spread is just crazy between the bid and the ask. So I like to play in the futures market. It just makes more sense. Grateful, but it says, man, real talk. I spent so much time studying TradingView, learning about the psychology of trading, that the Bitcoin course has taken a back seat. I will complete it on Saturday. Yeah, listen, it's no rush. I'm just saying that I understand that for a lot of you, you're busy, and it's okay. But just know, man, you're missing out on gains. But if you're trading, right, you also have to understand, focus on what puts money in your pocket right now, right? So if stocks or Forex, whatever you're trading is putting money in your pocket, put your focus into that. Courtney Gibson, I'm not selling anything till we hit $1 trillion market cap. Just so you know that. I'm not selling anything into you until I hit until we hit $1 trillion market cap. I'm not selling anything. I'm holding on my only thing I might dump 0x because I just don't like the way it's performing. But I'm not selling anything. I'm not selling nothing till we hit $1 trillion. Maybe some of these other garbage coins I have in the top outside of the top 100, like some of the old coins I have from 2016 and 2017. I have a lot of like garbage coins, but it's like dust. Like it's like $1,000 here or $500 there. There's nothing like, significant. So a lot of those coins, like if we pump, because some of those coins, like for example, like Substratum, I wasted my money and purchased that coin, which that was one of the worst coins I've ever purchased. I purchased the ICO of Substratum. I lost money. I lost a lot of money on that coin. So like, I don't even know if it's even listed. I know Binance delisted it. I don't even know where it's listed at anymore. I still hold it though, but I don't even know where it's like listed at. Like Steam, like I said, I still own some Steam from when I used to post over there on the Steam and blockchain. So like if that coin starts to pump, I'll sell that because that project's dead. That blockchain is just a dead ecosystem. No one really uses it anymore. So like stuff like that, I would sell that. But like my main coins, like I'm not selling Ethereum anytime soon. I really believe that Ethereum's going to, be the world's computer, and I want to stake. I don't want to sell any of my ETH. I want to stake it and become a validator. So XRP Pioneer said, I'm shell shocked. I'm not selling anything anytime soon. I'm not selling anything either. See, I agree with you, Courtney Gibson. Most traders just break even. Most traders actually lose money. There's an extremely high turnover rate in trading in general, whether it's swing trading, day trading, or investing. Like most people they don't make it through. And let's take a step back, right? The first thing that people they misunderstand with trading is gambling. Don't try to ever trick yourself and tell yourself that you're not gambling. Right? There is no rhythm unless you are co-locating on a stock exchange and you're able to front run people with your high frequency algos, or like you're a market maker and you can control the order flow. You don't really know what's going to happen from trade to trade. Right? So you have to accept that. You cannot control the market. I don't care if it's technical analysis, whatever the case may be. Most of the time, you're going to be a 50-50 trader. Some like for me, some years I was able to get as high as 56, 58%. Some years it gets close to 60, but most of the time it's around like 45 to 50. It's all about risk and reward. Once you understand that with trading, it's all risk and reward. I'm risking 1 unit to make 2, then you don't care if you're a break-even trader, if you're 50-50, right? Because if I have 5 wins and I have 2 units of reward, that means I have 10 units now, right? Because 5 times 2 is 10. And if I have 5 losses and I'm only risking 1 unit, that means I have 5 units of risk, of risk that I've lost. Well, if you subtract 5 from 10, you still have a profit of 5. Right? So as long as you just play the odds in trading, you're going to make money. See, so many people get it wrong because they get emotional about it. And it's very hard to accept the fact, like a lot of people can't accept the fact that you're going to be a 50% trader. So many people, they get it wrong. They want to be 80% or 90%. There's no way you're going to be an 80% trader or a 90% trader unless you're doing high frequency trading or something like that, and you're playing the arbitrage game. But if you are like a point and click trader, a mouse trader, where you're setting your own entries and exits and you're placing your own stops, you're going to be around about a break-even trader. It's all about risk and reward, right? 2 to 1, right? So I want 2 units of reward and 1 unit of risk. If you do that, you're going to make money, and you just keep rinse and repeat. If you do that, you'll be fine. Like once I learned that with my trading, it took my trading to the next level. Like that was it. Like I'm going to be break even. I'm going to be around 50%. Like think about it. Take a coin. If you don't believe me, take a coin, because understand that trading, right? An asset, a stock, or futures or whatever you're trading, it only can do two things. It either can go up or it can go down. So just based upon probability, that's 50% odds right there, because it only can do two things, either up or down, right? Now, if you take a coin, flip the coin 100 times, I guarantee you after 100 flips, you're going to be close to 50-50. Flip the coin 1,000 times. And I guarantee you're going to get close to 50-50. That's just the way trading is. 50% of the times you're going to be right. 50% of the times you're going to be wrong. You just have to make sure that when you're wrong, your emotions are not getting involved and you're not losing more than you should. Now, here's the flip side of that. When you start layering into positions, you may get more than 2 units of reward. See, so this is where your system can get real powerful. And this is where I start learning about layering in my contracts. So I may have 1 unit of risk, but this trade, Jerome Powell may announce some news or something may happen. And instead of getting 2 units of reward, there's times where I may get 3 or 4 or 5 units of reward, right? Because sometimes the market, you're not going to just sell at 2. Your profit target on your first contract or your first tranche may be 2, but then that second contract or third or fourth contract, or let's say you buy 1,000 shares of a stock, you may let off 500 shares after you have your 2 units of reward. But if the stock keeps going up, you just hold it and move your stops to break even, or move your stops to, wherever you want to move your stops to. So you get those times, you get those runners, and now you just let your runners run. And your runners is where a lot of your profit comes from. See, this is where people get things confused at. You let your runners run. You cut your losses quick and let the runners run. If you let the runners run, man, you sit back and you just cash out. So that's what I can give you guys some advice on that with trading. Once you master that, you'll be good, man. You'll make a ton of money. But we're coming up on an hour and a half, so I'm going to end the live stream here. Please like the video, share the video, subscribe, and hit the notification bell. Thank you to everyone that's donated. For those of you who are part of My Tech Academy, tomorrow at 1 p.m. we're having our live Q&A for students inside of the introductory level courses. Please go to the page that was emailed to you and submit your questions so that I can actually answer these questions for you. So anything that you're struggling with inside of the courses, post your questions. There's an actual form that you can post your questions and then enter your question and I'll answer it. For those of you who are part of the Coding Bootcamp, there's new content every day that's going to be put in there. There's already about, I think it's like 11 videos now, 12 videos. Please keep up to date, because what's going to happen is we're moving quickly. And then once we start building things, if you're not keeping up, you don't come to the live sessions when we're building things and start asking, what is a variable and what is a function and what is a method? Like, we're covering those things now as far as syntax. Make sure that you are keeping up to date with that material. The book is posted in there as well. And then tomorrow there should be another 2 or 3 videos released as well. So guys, keep up to date. Do not fall behind, because once we start moving, it's going to be hard for me to leave working on the projects when we're live to trying to teach you about basic things. That's why we have those videos for you to cover it, right? So I'm going to leave it here, and I'll probably do a live stream tomorrow too. So have a blessed and beautiful evening, everyone. Have a good night.